In this video I will talk about Target Corporation and this video will be a little bit long because YouTube like long videos. If you don't want to watch a presentation part or any other parts, just use timeline. First of all, I have to say that it is a quite big company, $100 billion, and from one side it is good because they couldn't fall to $20 billion in one day because they're just huge. But from the other side, we wouldn't see any unrealistic upsides like plus 100% in 1 year. And I think it is a minus because I can make 50% per year. Check the first link in the description down below. They're paying dividends with a low payout ratio, only 22%, but it is a discount stores and gross margin 29%. That is why profit margin only 6.6. Here you can see a fresh infographic from Target, plus 21% digital comparable sales on top of plus 145% in 2020, plus 12.7% comparable sales on top of historic 19.3% in 2020, 106 billion in total revenue, up plus 35% since 2019, and I don't really like when companies use these tactics. It looks really big, but it is just plus 13% per year. $14 billion from stores and 13 billion from digital, and that is why their margin grow from 4% to 6%. Traffic up 12.3%. Double-digit comp sales growth across all 5 core categories: apparel, food and beverage, essential beauty, home and hardlines. 30 billion in own brand sales, up 18%. And this number quite high because it is 30% from all sales. It is awesome. We continue to scale our stores as hubs strategy, building even a better experience and creating room for future growth. 95% of our total sales, physical and digital combined, were fulfilled by stores, and it is extremely interesting, and from my point of view, all other stores, companies shifting to this model because they can grow their margin. Same-day services are the fastest growing part of our business. And here you can see that drive up more than 70% on top of 600% in 2020. And it is quite interesting when you just take your stuff with you without even going to the shop. Deepened our relationships with leading national brand partners like Apple, Disney, Levi Strauss, Ulta Beauty, and here you can see an example. Opened our first 100 Ulta Beauty at Target locations with 250 more planned in 2022. 4 new brands, and I think it is quite simple to make new brands if you have a place where you can sell them. Investments in a bright future. Open 32 new stores and 4 supply chain facilities, including 2 new sortation centers. In 2020, we will open 30 new stores, complete about 200 store remodels and add 5 more sortation centers. In 2022, we're setting a new starting wage range of $15 to $24 and expanding access to healthcare benefits to more team members. And I think it is quite sad because they will lose some percent of margin with this new costs, and I think it will be really hard to generate margin in other places, and maybe they will go down to 4% again. To make a prediction based on my model, I need revenue growth rate and price to sales. For fiscal year 2022, the company expects low to mid-single-digit revenue growth, and it is like 5% plus minus. If we will check target history, you can see this blue line, it is a market cap, and they are on a highs right now, $106 billion, and you can see that in 2018 it was $35 billion. You can see that share price growing, and it is awesome. On this part you can see why actually share price growing, because in 2005 it was 886 million shares, and now they are making buybacks, and now they have only 476 million shares. I really like Guru Focus, and you can see that they're predicting really nice growth in the future, but now it is modestly overvalued, and I'm fully agree with this number. Future revenue growth rate 4.59. Interest coverage very nice, 21, and it means that they don't have any problems with debt, and future rate increase wouldn't harm the stock very hard. From my point of view, the revenue jump from 1 year growth rate to 16%, it is not a sustainable growth, and on a 10-year mark, they will come back to maybe 5 to 10% or 6. And I think it is the best part of this video, because we can make a prediction. Price to sales in this model 0.7 and CAGR 5%. You can see this green line. And from my point of view, we will see 190 or 180 in this stock. Now we have price $234. If you're a true believer in Target Corporation, maybe you think that normal price to sales is 1, and maybe it is a fair for 2020 and 2021. That is why you can see this another prediction with I think close to fair value for this stock. And as a resume, we have two scenarios. We will stay in this range for years, or we will see a drawdown maybe in this year.